Hello and welcome to the Signia market review for the month of August. My name is Harry Elliman and I am an investment analyst here at Signia. Starting with equity markets, market performance was largely negative. In the US, markets started positively after the recent CPI print illustrated a moderation in inflationary pressures. However, the second half took a volatile turn after the annual Federal Reserve event at Jackson Hole. Notably, Chair Powell's speech emphasised the central bank's commitment to retaining price stability and noted that policy will have to stay restrictive for longer. This led investors to price in more aggressive policy, resulting in major drawdowns throughout the equity markets. The S&P fell 4.1%, whilst the more rate-sensitive technology index, the Nasdaq, fell 4.5%. European markets were varied. The Euro Stoxx 50 dropped over 5% as the ongoing energy crisis weighed on sentiment. Record high inflation is causing a headache for the ECB, who are now seeing potential raising rates by 75 bips at their next meeting. The outperformer was the FTSE 100, which despite falling 1% is still positive for the year. This is fundamentally as a result of the composition of the index and the large decline we are seeing in sterling. Japan was the outlier this month, rising over 1% as inflationary and interest rate pressures are moderate compared to its global peers. China fell nearly 2% this month as economic growth stagnates and COVID policy causes concern. Fixed income markets continue to struggle in August as investors priced in a faster pace of rate hikes across global central banks. Treasury struggled as the Fed remained content on retaining price stability, causing yields to spike once more, whilst European bond yields also surged as the ECB officials began discussing the potential for a 75 bip increase at the September meeting. US corporate and US high-yield bonds also fell on expectation of high rates, and also the effects that this will have on US businesses. EM bonds outperformed as a result of policy being less hawkish in these regions compared to its developed market peers. Finally, in the alternative section, broad-based commodity performance was varied. On one side, we have concerns surrounding a global growth slowdown on the back of rising interest rates, which saw commodities such as oil drop over 9%. Yet, we have supply chain disruptions and the ongoing energy crisis in Europe, which saw other commodities, such as natural gas, rise 25.7%. On the currency front, the dollar appreciation story continued in August, as it rose strongly against major peers as a result of the Federal Reserve's aggressive monetary tightening. The pound fell 4.5% against the dollar on concerns surrounding political leadership, a fragile UK economy, and the expectation that the Federal Reserve's interest rate policy will outweigh the Bank of England's. Additionally, the dollar rose 1.7% against the euro as the ongoing energy crisis weighs on European growth, and once again on expectations that US rates will continue to accelerate higher than European rates. That's all from us here at Signia. Thank you for listening.